Hey everyone, so in this video, we are going over 5 great ways you can start making money in real estate right now. So I'm a real estate broker and I've been in the industry for 5 years. So I'll share my perspective on how anyone can begin investing in real estate, which is by far one of the best asset classes that exists. Thanks to Masterworks for sponsoring this video. So from the year 2000 to 2021, there was a 219.32% total appreciation rate in California, which averages out to a 5.48% annual appreciation rate. And that type of performance is not just in California, we're also seeing super strong performance throughout the country. For example, the Federal National Mortgage Association predicts that home prices will rise 10.8% in 2022. With that being said, we can never really predict the future of the housing market, but we can see that historically, real estate has been a very strong investment. So the first way that you guys can actually invest in real estate is just simply buying a primary residence and allowing it to appreciate. Nationally, the median single-family existing home price rose in the first quarter of 2022, with 70% of the markets showing double-digit home price appreciation. A lot of people are owning where they live, and the US home ownership rate surged 1.3% to 65.5% in 2022, which actually was the highest annual rise ever. On average, homeowners have a 40x higher net worth than renters due to being more financially responsible by owning a home, and of course through making money through appreciation and home equity. Now, I will say that relying on appreciation alone is not the best because appreciation is never guaranteed. However, there are resources we can study to help us pick areas that are going up in value. I recommend using city-data.com and keeping an eye out on historical price trends, population trends, income growth, as well as crime data. Of course, choosing a place to live is largely personal, but you can also do things like choose the worst home in the best area. This allows you to bring in some sweat equity by doing some cosmetic fixes, which should increase the home's price significantly more than whatever the upgrade cost was. This is exactly what I did back in 2017 when I bought a pretty gross fixer-upper apartment in a really nice area, and that increased the price of the condo significantly. So yeah, definitely a technique that a lot of people do to make money with real estate. From there, you can actually lower your living costs by renting out an extra bedroom or two to tenants. This is called house hacking, and it's a great way to save on your mortgage and make owning a home much more affordable. For example, in that condo I talked about, I actually rented out the other bedroom for about $1,500 a month, which cut the cost of the mortgage down by almost half. It is a trade-off between full privacy and keeping your wallet happy, but I'd say that for most people, it's well worth it. As you pay down your home, part of the payment is going towards interest and part is going towards your own equity in the home. So yeah, think of it as a savings account that you'll recoup if you sell or if you do a cash out refinance or home equity line of credit. This plus the fact that appreciation is hopefully increasing the value of your home means that you're seeing leverage gains. Here's the math. Let's say you buy a home for $500,000 and you put 20% down or $100,000. So your total investment is $100,000, right? Now let's say the home value goes up by 3% in 1 year. Your house is now worth $515,000, meaning you essentially made $15K. But the cool part is that you made that $15K by only investing $100K, meaning we have a 5x leverage or a 15% return on your cash. That is super solid, and it doesn't even take into account any rent you're charging or the equity that you're building by paying off your mortgage. So yeah, overall, owning a home is a great way for most of you to begin leveraging your money and investing in real estate somewhat passively. If you guys are investing in real estate, odds are you're looking for a way to diversify your portfolio away from the stock market. And if you're still cautious about getting to real estate or you don't have the ability, I want to tell you about an amazing opportunity that checks all of the same boxes and more. In fact, I'm doing it myself, and I'm talking about investing in art. It sounds strange, but think about it. Art is a physical asset that appreciates in value over time, can yield fantastic returns, and hedge against inflation. In fact, contemporary art, the kind I'll show you how to invest in, has price appreciation that's outpaced the S&P 500 for the past 26 years by an insane 164%. No wonder 85% of wealth managers recommend art as part of a wealth offering, according to Deloitte. And look at the price appreciation when inflation is high, a whopping 23%, beating gold and the S&P. Now the question is, how do I get into this market? Well, I'll tell you how I'm doing it. Masterworks. They're the premier platform for investing in art from names like Picasso, Banksy, and other iconic artists for just a fraction of what billionaires pay to purchase. Once they buy a painting, it's securitized with the SEC, breaking it into shares. Then members choose the amount they want to invest, making it an affordable way to diversify with art. And all 3 paintings that they've sold so far after offering have returned over 30% to investors net of fees. Past performance is not a guarantee of future results, but still, I think that's an amazing track record, and it makes sense why Masterworks is already valued at $1 billion, a bona fide startup unicorn. I don't think opportunities like this come along often, so I am really glad to be a part of it. In fact, after the the last time I talked about Masterworks, so many of you guys signed up that they want to keep offering me priority access. So you guys can skip their waitlist simply by clicking the link in the description. And now back to the video. So another very popular way to invest in real estate is by buying investment properties and renting it to long-term tenants or doing short-term rentals on Airbnb. The average Airbnb host in North America made $41,026 in host earnings on Airbnb in 2021. Since 2017, national rent prices have increased from $1,037 to $1,326. Most states are up 10 to 15% in rent since Q1 of 2020, and 34% of landlords have no college education, and 44% are between 18 to 34 years old. For most people watching this video, I suggest finding an area you want to invest in, and you can do the same steps I talked about above with city-data.com, which will help you pick a spot. Next, you're going to want to work with a lender and real estate agent in that area who specializes in investment properties. If you're buying out of state, this is super important since you likely won't be there in person for all the showings and inspections, and they can even help you with the cash flow projections. Typically, you'll want to stick with the 1% rule, which says the monthly rent should be no less than 1% of the total purchase price. Meaning if you buy a place for $100,000, the rent should be at least $1,000 monthly. But yeah, the reason why this type of investing is so great is because it can actually be pretty passive. Meaning if you hire a property manager, you won't likely have to do too much to maintain that income from your tenants. And if you want to do Airbnb, well, this can be pretty hands-on at first as you get the property renovated, furnished, and processes set up. But with the proper management team in place, it can also be quite passive and even more lucrative. The strategy that a lot of real estate investors do is called the BRRR: buy, rehab, rent out, and then refinance. Essentially, you're buying undervalued properties, doing renovations to increase the price, renting it out, and then doing a cash out refinance. If you do this correctly, you should be able to pull out all or most of the money you originally put in, meaning you may have a cash flowing property without any of your own money still tied up. People like Thash Nguyen talk about this method all the time, and it's become extremely popular in the recent years. Overall, there are tons of other benefits to investing in investment properties besides just making money, especially when it comes to the taxes. The government really encourages us to keep our money in real estate, giving us 1031 exchanges, step-up basis, cost segregation depreciation, and a ton of other tax incentives that make owning real estate very, very good if you want to pay less taxes. I can't get into all of it in this video, but I'd recommend learning as much about it as you can. It makes real estate investing that much sweeter. All right, third is buying a home that allows you to add sweat equity, fixing them up, and then selling for a profit. This option is by far the most hands-on because it requires a lot of technical expertise and time on your end. You've likely seen this done in shows like Property Brothers and Flip or Flop. Generally, a rehab costs about 10% of the purchase price of the house. 58.3% of home flips were purchased with cash, and 5.9% of all home sales in 2020 were flip homes. You can definitely make a living off of flipping houses, as homes flipped in 2021 typically generate a gross profit of $65K nationwide. So here's the process. You begin by identifying undervalued homes that are for sale or reaching out to sellers of distressed looking homes asking if you can buy their house. Now, this is easier said than done, but basically the real money is made when you buy the property. Why? Because if you buy a property for more than it's worth, then you likely won't make a profit when you sell. After that, you need to renovate the property, and you can do this with a general contractor who brings his teams and makes the whole process a lot easier, or you can actually manage the renovation yourself by hiring multiple subcontractors. For example, someone to paint, someone to do the kitchen, floors, all that stuff. This is much harder, and I learned the hard way by taking this route on the condo I talked about previously. But you do save a good chunk of change. After that, you sell the property. And if done correctly, you just put in a lot of sweat equity and you'll see a sizable profit. It's one of the more risky ways to invest in real estate, as a lot of it is out of your control, including the markets, unforeseen repairs, and a lot more. But yeah, it's a super cool way to start making cash flow by actively investing and flipping properties. I know a lot of people who absolutely crush their flips, and I do really believe it is a skill that can be learned by anyone. A lot of investors will actually pair this flipping strategy with the BRRR method, meaning on a case-by-case basis, they'll see if it makes more sense to flip the property for an instant payout or to hold on to it, refinance, and then just rent it out. I will say the taxes on flips are likely going to count as short-term capital gains, meaning you'll be taxed at ordinary income rates, which is very high for a lot of people. So that's why sometimes people really just like to build a portfolio of investment properties and continually 1031 exchanging them into bigger and bigger properties. This helps avoid any capital gains tax, and they'll just keep doing this until they die, when, as of right now, their heirs will get the property at the step-up in basis. That means they aren't paying any taxes at all. All right, so next up are REITs, and this stands for Real Estate Investment Trusts. They allow you to invest in companies that invest in real estate assets. So essentially, you get to invest in their portfolio, and as a result, you don't need to buy a property yourself. The 3-year average for REITs between November 2017 and November 2020 was 11.25%, which actually outperformed both the S&P 500 and the Russell 2000. REITs are required to pay out 90% of taxable income to shareholders, meaning their dividends are usually higher than the average stock on the S&P 500. Only problem is this is taxed at your ordinary income level. REITs have outpaced the S&P 500's total return since they started tracking it in 1972, and the self-storage REIT subgroup actually performed the best at a 16.7% average annual total return from 1994 to 2019. So yeah, REITs are a super popular way to get into real estate without having to deal with buying a property yourself. And as a result, lots of people who prefer a more passive approach to real estate like this route. So there are 5 different ways to invest in REITs. Private REITs, which mean you need to be an accredited investor, non-traded REITs, publicly traded REIT funds, and REIT preferred stock. I will say REITs typically don't perform too well with rising interest rates as it makes borrowing more expensive. And REITs are highly leveraged because, well, they invest in real estate with financing. So invest with care during these shaky times when we really don't know where the real estate market is headed. Fun fact, if you guys are investing in any S&P 500 index fund, real estate is about 3% of the S&P 500. So you're technically already invested, although you may want to buy an actual REIT if you want more exposure to real estate. There are tons of places online where you can look up analyses of different REITs, so I suggest you do your own due diligence before investing. But yeah, overall, REITs are a great way to passively invest in real estate. Number 5 is real estate crowdfunding platforms, and some of the more popular ones are Fundrise, CrowdStreet, YieldStreet, and more. Crowdfunding platforms like these are similar to REITs because they're both passive ways to invest. However, I'll say that crowdfunding uses capital raised from a large pool of investors who use that to buy, in this case, real estate. A huge plus of crowdfunding is that you don't need to be an accredited investor for many of the platforms, meaning the barrier of entry into private real estate is super low and accessible to most people compared to the other methods. I'll also say that while real estate crowdfunding has been shown to be less volatile than the broader stock market, one potential disadvantage is that there are fees, right? Like the developer of the platform needs to make a profit as well, and that tends to cut into the investor's profits. Your investment also can't be sold off quickly, and you'll be taxed on any dividends that you receive. Overall, if you want a pretty safe way to diversify your portfolio with real estate, but you don't want to go through the hassle of actually fixing and maintaining property, crowdfunding platforms are a great choice to be able to invest without needing a lot of money. Of course, seeing that you don't need to invest too much, it also allows you to have ownership in much larger properties than you normally would have access to, and in different sectors and locations too. So yeah, let's say you guys want to invest in commercial real estate, but you don't have the funds to. Well, this is a great way that you can actually, put your money into a crowdfunding platform and have that money be invested directly into a ton of different types of real estate. The risks with ownership are also split between multiple investors, and they also take care of all the logistics on their end. So it's a lot easier for you. Anyways, those are 5 different ways that you guys can get started investing in real estate today. Overall, I have very high conviction on the overall growth of real estate into the long term, and that's why I think it's one of the best asset classes to invest in for almost anyone. I hope you guys found this video helpful, and if you did, the first thing you guys should do is take action. Without action, all the stuff I talked about is pretty useless. But yeah, besides that, hit that like button and also subscribe if you want to see more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Thank you so much for your time, and I'll see you in the next video. Peace.